Hello traders, and welcome back to another daily analysis video. Today is the 10th April 2024, and let's get started. Starting with the US dollar index, it hit a low of 103.88 yesterday due to a falling US Treasury yields, but the market reaction remained high. So currently trading at 104.10, while movements persist as the Federal Reserve adjusts its stance based on the recent data. While the strong labor market data last week might be later easing, officials urge patience as the inflation and economic activity remain uncertain. The market sentiment is mixed, with technical indicators suggesting a bearish momentum. The key levels to watch here are 104.69 and 105 on the upside, while 103.8, 103.42, and 103.40 to provide support. Today, shorting the dollar index near 104.25, stop loss at 104.4, and targets at 103.9 and 103.8 could be considered. Next, for our crude oil, the WTI crude oil prices rose due to the failed ceasefire talks between Israel and Hamas, trading around $86.2 during the Asian session. The geopolitical tensions in the Middle East and supply concerns boosted prices to six-month highs. Uncertainty surrounding Iran's response to recent events and disruptions in the Russian refinery added to the risk premium. The optimism grew as the International Energy Agency raised its oil demand forecast for 2024. Technical indicators suggest a potential downward trend, but confirmation is needed. The resistance level stand at potential $87.08 and 88.37, while support lies at 84 and 83.85. The short-term downward movement is expected, with extended support at 83.36. Today, consider going long on crude oil near 84.3, stop loss at 84 and targets at 85.5 and 85.7 could be an option. And when the gold prices retreat from recent oil highs above $2,365, but found support near $2,350. Despite a drop in the US Treasury yields, the gold remained in positive territory. Trading within a range below 2,350, the gold is currently around 2,340. The expectations of Fed Reserve rate cuts and the central bank buying continue to drive pricing, with the Wall Street banks forecasting a potential rise to 2,500. Market focus is on U.S. consumer inflation data and the Federal Reserve meeting minutes. The daily chart indicates a clear upward trend, with the prices above all moving averages. Technical indicators, though losing some strength, remain overbought. Support levels are at 2,303 and 2,300, with resistance at 2,365 and a target of 2,388.3. Today, consider going long on gold before 2,348, stop loss at 2,344, and targets at 2,365 and 2,368. The Australian dollar remained bullish, reaching a 5-week high near 0.6645 against the US dollar, with potential for further upward momentum. On Monday, it rose steadily amid improved risk appetite. The AUD/USD was stable around 0.6604 during the Asian session on Tuesday. The US dollar index showed a slight decline at 104.15. Economic data from the US were light, with the New York Fed's consumer inflation forecast remaining steady. Chicago Fed President Hu Bi expressed confidence in the economy, emphasizing its strength. Traders await the latest U.S. inflation report for guidance. In Australia, the NAB Business Confidence Index rose slightly, while the Business Climate Index dipped. Technically, the AUD/USD broke above a descending resistance trendline, indicating potential for further gains. The RSI suggests upward momentum with room for further movement. A break above 0.6619 could lead to 1.6656, while the support lies at the 100-day moving average around 0.66. Consider going long on the Australian dollar before 0.661, stop loss at 0.6595 and target at 0.665 and 0.666. The GBP/USD briefly rose to 1.271 in the US, but dipped slightly, staying above the 1.266 amid negative sentiment in the US stocks. During the Tuesday Asian session, it hovered around 1.265, boosted by improving risk appetite ahead of Wednesday consumer price index data. The US dollar faces challenges amid market volatility and reduced probability of a June interest rate cut according to CME Research. In UK, BRC retail sales surged 3.2% year-on-year in March, attributed to the Easter-related spending. The technical analysis shows resistance at $1.27 and 1.2716, with support at 1.26 and 1.2586. Consider going long on GBP before 1.2658, stop loss at 1.264, and targets at 1.27 and 1.2705. And then for the USD Japan yen, it climbed to around 152 after comments from the Bank of Japan Governor Ueda signaled no rush to raise interest rates, reducing the yen's appeal. Despite the intervention concerns, the market remains bullish on USD Japan yen due to the diverging US and Japanese interest rates. The yen held steady near 32-year lows during the Asian trading on Tuesday. The Bank of Japan's dovish stance and positive equity markets continue to weaken the safe haven yen. Meanwhile, the dollar drew support from expectations of delayed Fed interest rate cuts, widening the interest rate gap. Traders approached the 152 resistance level cautiously to avoid potential intervention from Japanese authorities. The focus now is on US consumer price inflation data for March, with stronger than expected data potentially boosting confidence to break 152. Targets beyond 152 include 152.55 and 153.07. The support lies at 151.3 and 151, with further downside risk if breaking below the latter. Today, consider showing the US dollar before 151.95, stop loss at 152.2, and targets at 151.1 and 151. Lastly, for our Euro USD, rose to new highs near 1.09, but retraced gains, focusing on the downside. It edged higher to around 1.086 in early Indian trade, supported by the US dollar's decline. This week's focus includes US CPI data and the ECB interest rates decision. The stronger US data could dampen rate cut expectations, while weak inflation might fuel such speculation. Technical indicators suggest potential resistance at 1.0981 and 1.01, with further gains targeting 1.1139. Support levels are at 1.0724 and 1.0694. Consider going long on the euro before 1.0884, stop loss at 1.082, targets at 1.0885 and 1.0895. And that is all for today's trading. Thank you for watching.